What in this early part of the year has been occupying most of your mental load?
Does it rhyme with crump?
Well, Russians' foreign reserves that are basically held overseas, invested in things like dollars or dollar treasuries. The sanctions kicked in and they said you can't touch it. So it's like your money, but you can't touch it because it's kept elsewhere. Anyway, in this world, it's all about a balanced portfolio.
Yeah.
No all or nothing kind of
It's
bets.
like food, your diet. You can't just eat like French fries every day.
A little bit of everything.
Yeah, a little bit of everything.
Everything in moderation.
Yeah.
So you never had to sit a young person down and walk them through the history of everything from the year 2000 until today?
No. I don't think it works that way.
It's the onboarding process.
Onboarding.
You join the team, you sit down, I tell you my life story.
Or listen to this podcast.
And I think more importantly is that when there is really information and noise overload, stop reading so much Truth Social.
What's up, everybody? Welcome to another episode of Yala, your thrice weekly podcast where we talk about the hottest news with a touch of what, Terrence?
Good old humor.
Good old humor, man.
Yeah.
So today's special episode.
Yes.
Because we're going to be talking something that I think is on everyone's minds.
Yeah. All the time.
All the time.
Always thinking about it.
Yeah, all the time, always thinking about it. It's something that you'll see at weddings, at festivities, all around. And even now, there are queues of people, wanting to buy it. And that is the topic of gold.
Yeah.
And we have someone who is one of the best people to speak to about this. It is Selena Ling, who is the Chief Economist at OCBC. Welcome to Yalabat.
Thank you.
Welcome.
Yeah.
I mean, just broadly, the term Chief Economist, fascinating term. I mean, my understanding of economists is always in academia or, a class that I had to take in JC that I was never very good at. But what does a chief economist actually do in a bank?
Sure. So a chief economist basically look at market trends. We try and interpret economic data and then, make it accessible to basically our clients to explain what does it mean for you. And I think in particular, sitting in global markets, OCBC is really to tell you, well, given all these things that are happening in the world, in the economy, in geopolitics, how should you be planning your investment and hedging strategy? Basically looking after your portfolio investments, for instance.
And have you always been interested in economics? As a student, was it your favorite topic? Or?
Well, I always joke I'm an accidental economist because economics was not my favorite subject in JC. I was quite fixated on becoming a lawyer.
Oh, okay.
Yeah. So what happened was I went to NUS Law for a couple of months and then, I got offered a scholarship to do economics in London.
Oh, wow. Okay.
Yeah. So that was how I became an economist by training.
So because you chose London.
Yes. I mean, it was just to read economics at the London School of Economics.
But it means words, you must love words if you wanted to be a lawyer and everything.
Yeah, I mean, my favorite subjects was basically English, law and stuff like that, yeah.
Were you able to apply any of that passion or that love for, language and all into what you studied in economics?
Well, I think some of it, mainly because you do read a lot of famous economists and what they write about how the world functions, how the economy functions. But I think because of my job, I write a lot as well. So it's also putting down, pen on paper in the past, now on the computer, basically how I make sense of the world as it is today.
So when you went to read economics at the LSE, was it an immediate first love or did it take a while for it to be your pet passion?
I enjoyed the part about the rigor, the way they teach you, you learn things like ceteris paribus, which in real life it doesn't work, right? So how you model things in real life and make assumptions about, how markets behave, how consumers behave, for instance. And then you kind of fine-tune that along the way because you realize that actually real world is a little bit different. So I would say that the passion really came probably after I started work as an economist because that's when you apply what you learn in the textbooks to the real world. And you realize that there is a gap and how do you adjust for, those gaps? That's the interesting bit.
So is your job, is to think and just analyze data, think, and sort of be like the hit squad for the bank and tell everyone, what's going to happen in the next 12 months?
Well, that's a nice way to put it. A lot of times people will ask me, so what's your crystal ball? Yeah. And then I'll say, wow, with geopolitics, the way it's moving these days, I have to rub my crystal ball really, really hard because it's a bit blurry at the moment. But I think it's not so much to predict with exact precision what's going to happen, but it's more, I would always say, being intellectually curious. Why is markets reacting in a certain way, sometimes in surprising ways, and trying to connect the dots between what happens in other parts of the world and why it should affect the man on the street here.
I see.
So are you like always on? Like, is there ever this feeling that if you don't catch wind of a certain piece of news, it could affect your work?
Well, we do try very hard to stay on top of things. So, watching all the Bloomberg terminals and Reuters screens and whatnot and keeping up on the news does help quite a fair bit. But I think, these days there's so much information overload. So it's trying to cut through the noise, trying to make sense of what really is important. I think that's the key skill.
Yeah. But one question I always have about economics, I mean, I didn't take economics in school, but there's a lot of modeling of behavior of the markets, of individuals, and you mentioned that gap, right? So then, like, the gap is close enough to mean that the models still have a place, like they still have a use? Because, like, you can write a business plan, but when you start a business, it's totally different. And sometimes you think, then what's the point of a business plan? So how does the models thing in economics translate, given that there is a gap?
Okay, so modeling is still quite important because a lot of times you are being asked to forecast. They will ask you forecast GDP, forecast inflation, forecast where's dollar thing going, forecast interest rates, etc., etc. So the models are still important, but each time the data comes out and you see the gap between your forecast and the actual data, then you have to think really, really hard. Where is that gap? And then you adjust, right? Is it anomaly or is it a structural break? And I think a lot of times, like, post global financial crisis, the world has changed, or, even today, because of tariffs, inflation modeling also has to take on more interesting variation because of some of the tariffs. So it's the constant process of re-examining, reassessment and adjustments.
So, I mean, it does sound like there's a lot that goes through your mind and your newsfeed and your mind, right? Like, what in this early part of the year has been like occupying the most space, most of your mental load?
Does it rhyme with crump?
Or dump?
Well, for last year, I kept joking, it's Mr. T. And this year, no surprises. Straight off the bat, we had news about Venezuela, we had Iran, and now Finland. So
Greenland,
yes. Sorry, Greenland. Yeah, so he is dominating a lot of the airtime.
So, and airtime ultimately means that it affects the work that you do on a day-to-day basis.
Well, definitely we have to adjust because, people will say, what's your outcome from this tariff announcements on Finland? How is it going to affect the 8 countries in Europe? How is it going to affect their growth? How is it going to affect what the European Central Bank decides next to do with interest rates? How is it going to affect trade? How is it going to affect relations with even China or the rest of the world? So a lot of follow-on questions.
And I mean, like, in your day-to-day work, because you've also been chief economist at OCBC for a good amount of years, right? How would you kind of say the decisions or the insights that you come to are made up based on pure research or based on your own experience? Like, how does that weigh against each other? Because you've seen so many things happen in your tenure, right? Since 2000.
Yeah, so I always think that, financial markets and the economy keeps evolving. That's what makes life interesting, even though I've been an economist for a long time. And I always joke that, each crisis is different. The drivers are different. The world is changing. If you talk about in the past, people worry about Y2K. A lot of people don't even know what that is. But, if you talk about AI these days, people know what that is, right? And that's changing both lives and also how businesses work. And I think it will probably be a growth driver really fairly soon through productivity gains. So in that sense, the work is always evolving. Markets are always new. And I think what's interesting is that market behavior also changes, right? Because after what happened last year with Liberation Day, for instance, people kind of went into shock. Most economists and analysts started slashing all their growth forecasts because they say, this is kind of like the end of the multipolar world as we know it, right? But then if you look what happened after that, people latched onto this idea of a taco trade, and then trade deals got done. Tariffs came down. It wasn't so bad after all. Then all the focus got adjusted up again. So actually, it's the market reaction, market expectations, and the positioning flows that actually matter a lot more, I think, in today's world.
So does it, kind of like allow you to better assess these sort of monumental changes? Because like for a layperson, I read the news, I'm like, oh my God, what the hell is happening? But for you, does your experience lend itself to like, okay, it's not the end of the world, we've been through worse? Is there a lot of that?
Yeah, I think to a certain point, if you have seen the highs and lows, you have seen various market cycles, you have seen various crises, like I mentioned, 9/11, Eurozone crisis, Silicon Valley Bank, subprime, etc., etc. Then you kind of like get an idea that, this too shall pass, right? Let's not overreact. Typically, financial markets react first and then they adjust later and they will settle down ahead of the real economy. The impact on the real economy typically takes longer to show up.
So, there are a lot of changes in the world today, but something that, we're here to talk about as well, gold. It seems to be always a constant throughout human history, in a way. But why does gold matter today? In a world where everything's just changing and so much around the world we're so uncertain about how the world's going to look in a year's time.
Yeah, I think precisely it is because the world is changing. Policy unpredictability is picking up. People feel worried about the geopolitical developments, about the Russian-Ukraine war, and other hotspots around the world. And that's why they like to have, tangible hard assets. But I think there is also some underlying structural trends behind this because, with the rise of digital currencies, people are also worried about what is the role of fiat currencies, for instance.
Yeah.
And, over the past months and years, there have been questions about the direction of the US dollar trajectory, right? When investors saw what happened with Russia's foreign reserves, for instance, then they worry about, if your assets are being held in dollars or in dollar-denominated assets like US Treasury bonds, right? Would there ever come a scenario where it can be held hostage against you, right? So we saw that even central banks and sovereign wealth funds started to diversify their portfolios, meaning that they would, start to hold more alternative assets, including gold. So gold reserves as a percentage of their foreign reserves have actually picked up. This has always been the case for a lot of the developed countries' central banks. But the trend that's been developing over the past couple of years is that even the emerging market central banks started to accumulate gold. So these would be your likes of, China, India, Poland, etc. Even Singapore, for instance. Yeah.
So why is this not a trend that comes up at every financial crisis or, world-changing event like COVID or what? What specifically in the last couple of years, it seems different from all these previous crises. Why is that?
I think there has been a fundamental shift in the way people see gold. It's not just a nice to have. In the past, people always say gold is inflation hedge, right? If inflation is high, gold, although it doesn't really yield you any interest returns, right? You're just really betting on the price appreciation. But increasingly, because of the whole unpredictable tariff policies, trade policies, wars, and like I said, where people think the dollar is going, there have been a lot more interest in holding gold, partly because, there's no counterparty risk. If you're holding hard asset like gold, it's yours.
Yeah.
You don't have to go through any SWIFT payment systems. You don't have to use other payment rails. You're not exposed to, sanctions or any of those type of risks that people associate with the world today.
But what is different about this time? Because like you mentioned, you've seen through many highs and lows, right? But it feels like there's an increased amount of interest in gold, especially. Is it because previously the geopolitics was not that big a concern, or like, what about it now? And is there anything of that that's even surprising you?
I think there are two game changers. One, as I mentioned earlier, was the fact that countries' foreign reserves, in this case was Russia, can be leveraged by another country.
Actually, for context, maybe you can, like, well, what is the summary of what happened to the Russian foreign reserve?
Well, so when the Russian-Ukraine war started, Russians' foreign reserves that are basically held overseas, invested in things like dollars or dollar treasuries, basically the sanctions kicked in and they said you can't touch it. So it's like your money, but you can't touch it because it's kept elsewhere, right? So a lot of countries looked at that and they got kind of worried, right? If it's my money, then it depends. I have to think really hard about where I keep it, what currency I keep it in, and what assets I keep it in, right? So that's when people started to think a little bit about diversification. The other big structural change, I think, is the way people look at the dollar, the US dollar, because US dollar enjoys a privilege of being the reserve currency of the world, meaning that, the Fed, the central bank can print money in the US and people still will have demand for dollars, right? But, if they look at the fiscal debt story in the US and then they worry, is it sustainable, right? Are you going to end up with hyperinflation because they were going to continue to print money in order to finance, like the big beautiful bill, for instance, right? And the debt levels of the US, is going to hit a level like Japan. What's going to happen to the value of the dollar? So hence people worry about what they call dollar debasement, meaning that the value of the dollar drops over time, right? In that case, for major central bank and sovereign wealth fund managers that have a high concentration to dollar and dollar assets, like they buy US Treasury bonds because that's the most liquid government bond market in the world, right? Then they will worry, is the value of my portfolio in that currency or in that asset going to diminish over time. And hence for the new incremental money that they're going to invest, they may say, let's not put it into US dollars or US Treasury bonds. Let's think of alternatives. But the sad thing is actually, is what I call the Tina phenomenon. And there is no alternative. Right? What are the alternatives you can look at?
Tina Turner or something.
So what's the alternative? If you don't put it in US dollars, do you put it in euros? Do you put it in Japanese yen? Do you put it in renminbi? There aren't that many alternatives, right? So gold comes up and looks quite attractive because gold will not suffer from, let's say, the issues about economic challenges in Europe, right? They will say, well, they are not exposed to some of the same fiscal and debt issues that Japan has, or with the aging population, or they say, well, it's not exposed to like China because of this US-China contestation that's ongoing. So in that sense, it comes up as a relative safe asset.
So the rise in the prices of gold, do you think it's something that is a reaction to geopolitical risks as opposed, and does that mean that if the world becomes more predictable and more stable, like how we used to know it, means that the price of gold might go down again, or do you feel like what you said, like fundamentally something about the relationship with gold has changed?
So actually, medium term, I think I'm quite constructive on gold, mainly because if you believe that this world is going to stay fragmented, there is polarization of trade and who is trading with who, and tariffs have fundamentally reshaped supply chains, then I think the story for continued diversification away from the dollar into gold will persist. But that's not to say that short term there won't be volatility, because short term, of course, it rises and falls like what you say with how people feel. Do they feel risk adverse or they feel that it's risk on, right?
Yeah.
So yes, if tomorrow, let's say everything is hunky dory on the geopolitical front, you probably will see a retracement. But the broader long term trend, I think, is still very constructive.
Okay.
And I mean, you mentioned if you believe that there is a more fragmented world, multipolarization, you would think one way. But you mentioned just now the game changes, right? But is the nature of geopolitics also at a place that we have never seen before? Because I say that because, I mean, one big announcement is that the Lion Global Singapore Physical Gold Fund is been launched, and is the first physical gold fund that is insured and vaulted in Singapore. And what I understand why that's an important distinguisher is because it is set in Singapore, right? And you mentioned just now that when what happened with the Russian foreign reserves made countries look and go like, that could happen to us. That's not something that countries would have thought 10, 15 years ago.
Yeah, definitely.
And it is because of the way the geopolitics is changing. Because I can imagine something vaulted and reserved in Singapore for gold would be a good thing at any point in time. But now, is it especially more important because of this new chapter?
Yeah. So you just go back to the case of the Russian foreign reserves.
Yeah.
It is your money.
Yeah.
There's no question it was Russia's money. But the problem is you can't access it when you want to.
Yeah.
Right? So the whole point about physically vaulting your gold here in Singapore is basically that you have the guarantee that you have access to it. So if it's vaulted somewhere else, then depending on what happens on the geopolitics front, or if there's sanctions, or if there's capital controls, or whatever is the case, there may be restrictions on your accessibility to that physical gold elsewhere.
Yeah.
Right. So I think that's the key distinguishing point.
But is that a bigger risk now more than ever? Because I would imagine even 20 years ago, the same argument would hold, right? You have foreign reserves. Technically, you might not be able to access it. But it feels like that wasn't fathomable back then. People were more kumbaya back then, is it?
Well, not so much that there were people who were kumbaya back then, but because, we talk about multilateralism, people believe in working together.
Yeah.
But increasingly what you see now is the pressure, if not the breakdown of institutional, independence and multilateral collaboration and cooperation, right? I mean, the fact is the US is pulling out from a lot of organizations, right? And that shows that basically they have taken a stance which is more individualistic, more transactional, and US being the US, the biggest player in the world stage. If they are taking that stance, you can be fairly certain that a lot of other players will start thinking, okay, we have to look after our own individual interests, not, sacrifice for the greater good. So everyone becomes a lot more
protectionist.
Pragmatic, transactional, whatever is the term you want to use. So
Right.
in the kind of environment, then it's not that bad things will happen. It's just that the definition of potential bad things that can happen has widely expanded.
So now your economic models all need to have a T factor, is it? to correct for whatever it would.
We don't call it a T factor, but geopolitics has become a very big consideration.
So, I mean, hearing everything, it does sound to me, are we talking about investing in gold as like sort of a peace of mind insurance thing, or is it something more about thinking about the returns that gold can bring you? Like how should people be thinking about that?
So in the past, people think of gold as in peace of mind. Like if you go and ask your parents, they'll say, okay, in case of war, gold is the currency to rely on, right?
Yeah.
But people don't really think of gold in that kind of mindset anymore, right? So then the question is, what is kind of like how do you balance your portfolio, right? You have portfolios would have, investments in equities, in bonds. You may hold some currencies. You may keep some cash deposits, right? Then, you would think, what is the hedge or the balancer in your portfolio? So it doesn't have to be a big allocation. It can be 5% or 10% if you are fairly fearful. So this is kind of like, if everything goes wrong, what is the thing that you can rely on to hold its value in your portfolio? That is not correlated to all your other financial assets.
So then if it's like the lowest risk thing, why not just shift all investments to gold? Like do a Hail Mary. Like what's the worst that could happen to gold?
Well, you have to remember, gold doesn't yield you anything. The prices can go up and down. So unlike your investments in equities or bonds or whatever, those that yield you a return, right? They pay you an interest or they give you a dividend, right? So you may be holding on to something that doesn't give you any dividends or interest in the interim, right? And if you're, then you say, well, what if your call for the price appreciation doesn't materialize, right?
I see.
So anyway, in this world, it's all about a balanced portfolio. No all or nothing kind of.
It's like food lah, your diet lah. You can't just eat like French fries every day.
A little bit of everything.
Yeah, a little bit of everything.
Everything in moderation.
But then on the flip side, if gold is sort of like the hedge, sort of for peace of mind and all, and you talked about fiat currencies and how much people trust in them and all, like versus digital currencies or other, even tech stocks, for example. Tech is just, it's been the story of the economy for the past decade or so. Why not really, think about putting money in those rather than just putting it in something like gold that honestly, like the upside may not be as sexy.
Well, it's about your risk reward, right? Balance, right? So for tech stocks because of the whole AI narrative, it's very, very in now.
Yeah.
But we do know that tech stocks are actually also vulnerable to a couple of factors. One, of course, is whether this huge amounts of investments that are going into things like AI will pay off, right? Currently, there is a lot of promise and hope. Whether it can deliver in the short term, we don't know, and valuations are quite high already. Second thing is really, if you look at tech stocks, it doesn't mean that necessarily the front runners of today are going to be the winners of the future. I mean, look at what happened during the tech bubble. It didn't mean that when that whole digitalization tech adoption thing happened, it did have real economic gains even in the medium term, but you did also have a stock market crash because of that, right? So it's your tolerance for risk, and it's basically what you need to have peace of mind so that you can sleep well at night, no matter what happens.
And in digital currencies, what's the between that and gold? How should people think of it?
So digital currencies are also another asset class that has gained a lot of prominence in recent times. I won't talk about crypto because it's a completely different ballgame, but there are interesting developments in areas even like stable coins, for instance. So stable coins are, as what the term suggests, they are meant to be more stable, whereas crypto can be very, very volatile. Okay. And there are many, many different types of stable coins. Some of it will be sanctioned in the sense that they are approved by the central banks, right? There's a lot of talk about, Singapore may actually have a Sing dollar stable coin, for instance, right? Which, given Singapore's AAA rated sovereign rating and the fact that we are very neutral and very safe haven, I think probably would draw a lot of attention, right? But you also see other countries trying to basically jump on this bandwagon. So the US themselves, they have the Genius Act, right? The Trump administration also wants to, have the room to develop stable coins, and that will be based on collateral that is invested in US Treasury bonds. So it comes back to the dollar and US Treasury bonds. So even from that policy makers kind of angle, they are anchoring it back to the US dollar. So you can see where's the direction they wanted to develop.
I see. So it's still the risks of the fiat currencies is still there. Okay.
So, the one thing that seems to be the theme is that when, the world is more risky, there's more volatility, gold tends to be the asset that, is less risk, right? But then what is the market mechanic that corrects for bad actors? Because I would imagine now, when countries are all trying to get involved in other countries, it's incentivizing volatility. And with bad actors out there, they might think, oh, if I cause more trouble in this country, the gold assets I have would increase in value. Like, how does the market self-correct for that?
Well, I think the one way to look at gold allocation is that it's like your insurance, right? You pay some premium, right? Because in this case, you don't get an actual return from your gold investments, right? But you're hoping that you will, the shit won't hit the fan and you don't have to activate that insurance, right? But in the meantime, of course, if, the developments on the world stage feels like it's getting more dangerous or it's deteriorating, then of course your gold prices will go up and you actually benefit a little bit from the appreciation in the prices. But you have to recognize that it's an insurance that most of the time you hope it doesn't really materialize, the risk, but you're just kind of like buying that insurance.
I see. And what do you think about Singapore's role on the world stage now? Given, the Singapore story is always safety, stability. And I mean, now literally we're talking about physical gold in vaults here as well. Like, where does Singapore, where does it sit in how investors feel about the security of the Singapore assets?
So actually, it's interesting that you bring them up because there are two phenomena that we see developing, okay? In a very uncertain world, people and investors like Singapore's neutrality, right? We don't take sides, right? That goes down quite well, both on the business level, but also in terms of the investments. So actually, you see with this whole China slowdown story and, US tariff antics, actually there has been a lot more portfolio investments coming into Singapore. So you hear about, the number of like family offices being set up here, rich Asian Chinese investors putting their money here. That's because the trust level here is very high. And the trust is in, all sorts of things like governance, in openness, in transparency, in the ability to move your money in and out without, domestic, too many domestic, overlays and stuff like that. So Singapore has really benefited, and partly also because in this world, there are not that many AAA rated countries left. With very high fiscal prudence, well-run, government, legal system, etc., etc.
So in your time as chief economist, we talk about Singapore, but what about Singaporeans? Like the individual perspective towards not just gold, but understanding of macroeconomics or like Singapore's place. Do you think that has increased over time, or is it just like we are becoming more ignorant because in Singapore things typically work
too safe?
Yeah, too safe.
I would say that the understanding has actually really improved over time, okay? Because for Singaporeans, people are very pragmatic. They always want to know which side their bread is buttered on. So they want to know, okay, global developments, how will it impact Singapore's growth? Through Singapore's growth, what are the investments that will be coming in? How does that impact the job opportunities in my industry or sector? Does it mean that, am I going to get higher wage adjustments, for instance? Is inflation going to erode my increments, for instance? So as a small open economy, I think we are quite well adjusted in that we actually watch a lot of all these things. And of course, the other area of interest that Singaporeans always have is the strength of the Sing dollar, right? Because that's the purchasing power that they have when they travel overseas, whether it's to Malaysia or Japan or anywhere.
That's true.
But in your role as chief economist, where you oversee a team of researchers and economists, do you also find like the views and perspectives are also way more diverse than they used to be?
Definitely. I think, these days the team has grown. So increasingly the coverage in terms of asset class has also grown. So it's not just bonds, it's not just equities or fixed income or currencies or interest rates or macroeconomics, but even to things like ESG concerns, right? So we know that carbon taxes, for instance, in Singapore is going up. So what is the advice we would give to our clients who are affected by the carbon taxes? What should they be doing about that? So a lot of building that understanding, the education and also the advice on what to do.
But I'm curious, in a role like this where you're getting a bunch of super smart people in a room, all coming forward with super smart takes. How do you all come to decide, okay, what are the things that are actually the pillars of the research?
Well, there is a lot of knowledge sharing and consultations. We always say that research can be bottoms up or top down. When you look at like macroeconomics, it's very much top down. But when you're doing like equity or bond research, you're looking at the company level, you're looking at the industries, it's very much bottom up. But the two has to gel, or else it won't make sense. Yeah.
So there's a lot of like, I'm sure like a lot of intellectual debates and all.
There is it's very collegiate, so there is we can agree to disagree. That's okay.
Then I mean, is it a job hazard of yours where everywhere, gatherings you go, people are always asking you about what they should be investing in, and please tell me what the next 12 years, next year, what I should do with my portfolio.
Judging from your expression, I think it's
or even gold, like hey, this one, should I buy this necklace and things like that.
This one real one. How many carat is that?
Do you get that a lot?
I think the questions most Singaporeans tend to ask is like, interest rates going up or down? Because that affects your mortgage financing. Or they will ask you, equity market, is it too late to hop on the bandwagon, or, is it time to sell? So there are quite a lot of interest in these areas.
But do you like politely deflect it and say, I'm not working now, leave
or
me
read
alone?
my research.
Or read my research.
Well, I used to joke about this because when I first moved into my neighborhood and I used to walk my dog, and I used to get accosted by neighbors asking me, so how interest rate, is it a good time to refinance my loan?
Oh, is it?
Yes.
I mean, but aside from gold as well, I mean, I'm sure there's other spillover effects and interest in other kind of precious metals and all that, right? Do you feel that, has it been that everyone's interest in, say, like silver has also gone up because of what the gold prices have experienced in the past year?
Yeah, so interestingly enough, silver was kind of like a laggard, but they played catch up to gold, because people were looking as gold prices have run up so much. What's the other proxies that I can look at for gold?
Yeah.
But just bear in mind that silver has other use. It's not just a precious metal per se, but it has industrial use as well. So that tends to be a lot more driven by how people perceive the industry or the growth story is going as well. So you can see, like, even for the past couple of weeks, past couple of months, the volatility in silver is a lot higher than gold. So it's caveat emptor. You have to do your own homework. Know what you're getting into. Don't just blindly invest.
And it's not just silver; it's also other kinds of.
It's also other metals. Copper, tin, etc., etc. But those are again tied back to the story of like, okay, what are countries like Indonesia doing in terms of its quotas? What is China doing in terms of its policy for copper and companies? So you basically have to know what's happening.
Okay.
Going back to your extensive career as chief economist, like, given where we are now, what are some of the differences and similarities that you see now compared to other, times where we had monumental shifts, be it in terms of geopolitics or macroeconomics or microeconomics?
Well, I firmly believe that, the economy and the business moves in cycles, but the cycles are getting shorter. Right? In the past, people used to joke that, well, every 10 years you get a crisis or a recession, but these days it can be shorter, potentially. And that's partly also because with the speed of information that we get, right? In the past, things that happen in the US may take a couple of days to filter through to here. But now everything is instant.
On X, on Truth Social.
Yeah, whatever it is. It's instantaneous. And the reaction, because of electronic banking or digital banking, whatever is the case, can also be very fast. So I would say that the market reactions get compressed faster and faster. Some things don't change, but I did tell you that geopolitics plays a bigger and bigger role in the way we calculate risks and when we plan for, best case scenario, worst case scenario, and baseline scenarios as well. So, you asked about Mr. T, okay? he surprises and don't surprise. Okay, he surprises because there's something new being announced every weekend. He doesn't surprise in that this is him. This is going to happen again and again and again. It's just the timing and it's just the target.
So when you first started working as a chief economist, what do you, if you can recall, what do you think over the next 10 years, next 20 years would look like, and compared to what it is now?
So I think one of the discipline that's imposed by the market is that you don't think so far. If you don't even know what's going to happen tomorrow, you can plan all you want, but I would say there's more than an even chance things will not turn out the way you planned it, right? So again, the classic story of what happened last year, right? You can do all your worst case tariff scenarios and your best case tariff scenarios, but probably you're still surprised, right? So I think my best takeaway is actually don't overreact to everything that comes out on Truth Social. There's a lot of elevated noise levels, okay? Focus on a bit more on the fundamentals, okay? Geopolitics tends to cause an outsized impact on markets in the short term because financial markets are always shoot first, think later, right? But the real economy takes a bit of time to catch up. And actually what has fundamentally changed, which was your earlier question, is that I think policymakers now are increasingly sophisticated and more proactive in their reaction, right? I mean, if you look back at the, global financial crisis, right? And what happened with Lehman Brothers, right? So I always joke that, central banks in the past used to be the lenders of last resort. When everything is failing, okay, they will step in and they will lend, right? These days, central banks are probably even more kanchong than anyone else. They are like lenders of the first resort. Just look at what happened with SVB. Why did it not develop further, right? Because the central banks are there to provide liquidity already. Anytime there is a bond market wobble or equity market bubble that seems like it may have systemic risk, you can be sure the backup will be there.
I mean, you speak about how policymakers have evolved over time, but when you talk to individuals or people working as investors as well, across generations, do you feel that there's been a difference in how they view risk and financial security as well? Does it mean different things for investors today versus the previous generation of investors?
I think the investors today are actually more sophisticated because the avenues of getting information is many, right? Like, for example, this podcast, or you can read on any channels, or it's not your traditional media anymore. That said, again, in the social media, there also tends to be a lot of echo chambers. So one concern, of course, is that for investors that are younger, they may not have gone through the market cycle. The temptation is to think that prices can only go up. So we see that a bit more, in areas like crypto, because if they hear about their friends making big bucks from 1,000 investment in crypto, but they have not gone through the boom and crash kind of cycle yet. They may not understand or fully understand the risk. Is a bit more of a trend following, which can be a little bit dangerous. But there is so much information out there. There's so many ways you can learn that's available. Is no excuse to be lazy.
So you never had to sit a young person down and walk them through the history of everything from the year 2000 until today for
no. I don't think it works that way.
It's the onboarding process. For anyone who joins the team. You sit down, I tell you my life story.
Or listen to this podcast.
Well, that works too. Yeah. So let me give you another example, because and this will be showing my age here. But in the 1990s, the Singapore property market actually went through a pretty tough period. Right? At best, it was flat for many, many years. But for a lot of people looking at the Singapore property market today, they will think that the only way is up. which we know is not true.
I see.
So even like the Hong Kong's property market, people thought it was Teflon. Even if growth is down, property prices are up. But just look at what they went through in the last couple of years.
It's true. I mean, even for us, when we think about how the world is today versus what it was since we were born, it always felt like, like the end of the Cold War, and then we move into a world where it's just global trade and kumbaya everywhere, the most peaceful time in history. And then the last 5 years, everything that we've thought were set in stone, where institutions has been upended, whether it's world institutions like UN and things like that. So it's, even for us at our age also, it's like quite a shock, right, going through this. Right?
But I mean, on that note of shocks, you mentioned just now that the market has instilled a discipline to not plan too far ahead, right? But when you think about it personally, is there a part of you that feels that, how come the world is acting like this now? Because I mean, as someone who, we talk about news, I look at these world leaders and the way they're acting, I'm like, oh shit, have we been naive all this while? Is the goal of the world working together just a very temporary thing, when this is true human nature? We're back to, imperialism, and you just want this land, you just take it. Like, is there a part of you that feels cynical about that?
Okay. I think I better clarify the part about not planning too far. The context of that really is because sometimes people ask me, can you give me a 5-year, 10-year, 15-year forecast? And I say, good luck with that. I can give you, but don't count on it being accurate in 5, 10, 15 years, because the world changes so fast these days. So it's more in terms of the degree of precision in the forecasting. Okay, but directionally, I think it's very, very important to plan. For your own investment portfolios, for your own retirement adequacy, you have to plan. And then you look at Singapore, the policymakers are the best in this world for planning ahead, right? If they have already planned for 100 billion climate change fund for the next 100 years, they are superly foresighted. So I guess in that sense, it really depends on what you're talking about when it comes to planning.
But on the personal side, is there a part of you that feels like looking at the way the world, because there's economic theory, which is, everything that you have studied, you look at just very quantifiably. But on the personal side, as chief economist, having seen so much of the world go through all the cycles, how does that change your personal view on the world and how things, operate?
So I think economics is just the lens at which you look at the world. It's just like what we tell our interns who spend like 6 months with us. Say, whether your lifelong goal is to be an economist or not, or do research or not, but the what you learn on the job really is how you, for whatever information that comes into your mind every day, how do you process that information? How do you connect the dots? How do you find what are the implications of that information that you see or hear or read about? So it's really more that discipline, So when you read news about Trump imposing tariffs, what does it mean for you? What does it mean for your country? What does it mean for your industry? What does it mean for your firm? It's the ability to kind of interpret and to, be able to suss out what the implications are that I think is most important. So for myself, the way I look at, industries going up, going down, prices going up, going down, it's actually par for the course, right? I just have to remember, in the long game, usually what goes up must come down, right? There tends to be mean reversion, but it takes a very, very long time. Right? And I think more importantly is that when there is really information and noise overload, stop reading so much Truth Social.
So that's what interns are also told. Don't read so much social media.
15 minutes a day,
No, because you end up being very reactive, very panicky. And it may not work well, over the longer
time. Too emotional. So does that also mean that you don't see us heading towards the end of the world, right?
No, I don't see us heading towards the end of the world. I like to be an optimist.
Yeah.
I see. But the interns don't have like a, like they, when the first day they come in 6 months, they have to make a prediction that, and then you see how many come through, and then you can grade them accordingly. No such thing lah.
I would totally do that. I was
Predictive
Chief
KPI.
Economist. Like, okay, you were off by 15%. Get out. No, you don't do that.
Yeah. The price of gold in 6 months. I'll test you on that.
So the joke is, even for my analysts who predict gold prices or predict currencies or interest rates or whatever is the case. I remember this piece of advice that the head of trading told me when I first joined the bank, and it was a very interesting perspective. He says your job as economist or analyst, is to be either consistently correct or consistently wrong. If you're constantly correct, then of course it's good for the traders, right?
Yeah.
If you're consistently wrong, they just use you as a contrarian indicator. It also works.
As long as your trend line is
As long as you are consistent.
Better the devil you know than.
Actually, that's a good thing to use in personal relationships. Yeah, I'm always wrong, but it's better I'm always wrong rather than sometimes wrong, sometimes right.
It's like 50% wrong, 50% right. Then
What's
they
the
don't
point?
know.
Yeah, I got no value.
Yeah, mostly wrong. Mostly
Yeah,
wrong. Mostly wrong.
My trend line is always.
Yeah.
But now I can split it as a benefit.
Correct. So if you recommend me something, very nice to eat, then I know, okay, better not.
But in some sense, it will still be useful info because then
it's useful. It's
you
useful.
have the contrarian opinion.
Correct, yeah.
I see. So I mean, is there like, you talk about being an optimist, like what is the thing that excites you most about this new world that we are in going forward? With regards to gold, the economy, people.
Well, I think there will always be surprises. So if anybody tells you with great certainty they can predict the future, I'm sure the person is off. So it's like what I said, it makes my job interesting because I'm always learning new things every day.
I see.
That's very true. The more sure someone sounds nowadays, especially on social media, the more I feel like, okay, stay away from this person.
But cool. Yeah, thanks so much for sharing. Very insightful. And I mean, it's just a nice way to think about stuff we see in the news because it's very easy to be cynical. And it always feels like we're trending downwards, but sounds like, everything is almost cyclical.
Yeah, so I think the whole idea, I did mention this about market expectations and market consensus. It's not to say market consensus is right or wrong, but I think it's always important to listen to alternative views and alternative voices. So I think it's just to, if I can talk about, the show 𝘓𝘓𝘂,
yes.
I remember they said something about the council of one person's job is to always give an alternative view, right? So I think in this world today, when we're constantly being surprised, it's always important to think what could go wrong, and I guess that's probably the most important value add for a lot of economists and researchers.
Go wrong.
That's true.
Okay.
Think different.
But yeah, cool. I mean, since you brought up the show 𝘓𝘓𝘂, along that lines, we want to end off with the question One Shiok Thing, which is what we ask all our guests about something that you've seen or enjoyed in recent times that you can share with our audience. But we will go first, so you still have a couple of minutes.
Okay.
Sure.
Terence, you have your One Shiok Thing.
Yeah, I do actually. Mine's a video titled $2 versus $20,000 keyboard, and it's by a YouTuber who reviews tech products, and he decided to review $2 keyboards and then various keyboards increasing in price until a $20,000 keyboard. So these are keyboards that you plug into your computer and use. So the interesting thing is, I mean, the spoiler alert is that it kind of plateaus at about $200. Like, you pay more than $200, you're not going to get much bigger improvements in terms of how a keyboard feels or its functions and everything. But beyond that, it's quite relevant to what we're talking about. Beyond that, it goes into the trappings like gold-plated keys and gold-plated everything and LED lights all over that actually distract you from the use of the keyboard. So I thought this was super interesting because, it's a product that we use every day, we interact with daily. It causes a lot. Sometimes we don't even realize that, it's such an important part of how we interact with the world. But yeah, there are people who can spend $2 and people who can spend $20,000 on a keyboard. So it's just a very interesting exercise that he really compared all of them step by step.
But did he come to a conclusion where is the point of marginal? There's no marginal.
I just talked about it. There's about $200 is the plateau. There's a plateau beyond which you're paying for LED lights, you're paying for gold-plated stuff and all that already. So it's a pretty interesting exercise.
Yeah. Are you a fan of like the mechanical keyboards or any keyboard preference?
No.
Oh no.
Okay.
I believe in 1 or 2 generations, all humans will have huge thumbs.
Yeah.
And they don't need keyboards. Everything is on the phone.
She has 2 touchpad, iPad and iPhone in front of her.
So you prefer digital keyboards or you still like the tactile feel?
I'm okay with either.
Okay with either. You prefer tactile?
Tactile.
For keyboard
Blackberry era.
Really?
I never had a Blackberry.
I loved it. No, even now for writing and stuff, actually I would, if I could just concentrate on just typing.
I mean, there's company that has a keyboard that you can attach to your iPhone, just to give you something tactile.
Just to bring you, like, take you back to 2008.
I'll do this joke.
Sure.
So my daughter was taking her A-levels last year. And right before the exam, she came back and she asked me, do you have a stress ball? So I said, yeah. I said, are you stressed? She said, no. The teacher advised them to practice muscles because they haven't been writing for so long. Everything is on a keyboard, but exams you still have to write.
That's true.
So I do think we're going to be thumbs next time.
That's true.
Because now every time I have to write, I'm like, after a while, like very quickly, my handwriting gets cramps.
My handwriting just goes all over the place.
Yeah, it's terrible.
Whereas last time for econs, we used to for 2 hours, you just write non-stop.
Essays, right?
Yeah.
I don't think I can do that anymore.
That's true. That's true.
It's true.
Wow, interesting. Okay, cool. My one Shiok Thing is a video I chanced upon on YouTube that was just a screen test that Daniel Craig did for Casino Royale. So before he became the James Bond. I mean, you look at him, like he doesn't really look like a James Bond character, but just always heartening to know that whenever you see people, he's James Bond, he had to start somewhere. So it's just him doing the screen test with his longer hair and just one of those things you're like, okay, that's the backstory to how he became James Bond. Are you a fan of James Bond?
I think saying you're a fan of James Bond also tells you that you're from a certain era.
Correct. Yeah, correct. We live in the content space, but we're not one of those young content creators.
But to that point, I mean, like this Daniel Craig was like really a change in how James Bond was interpreted on screen.
Yeah,
like it was a totally different way of seeing how James Bond could be.
Yeah,
so a bit like how we are in the world today, like everything just seems so different from what it was in like the last 4 decades.
That's true. And I mean, he's still James Bond. There's no new James Bond, right?
I think it's a bit in limbo now because of all the sale of the the studios and stuff like that.
I see. But yeah, cool. Okay, over to you, Selena.
One Shiok Thing.
Yeah, one Shiok Thing.
Okay. Maybe I'll share about a book I read, last year, which I thought was very interesting. It's called Die with Zero. So in this world today, everyone's always thinking about, how can I accumulate more wealth, accumulate more riches, But this kind of like flips the whole concept around, that actually our aim should be to die with zero. And it tells you how you should look at whatever you have and how you should be thinking about using what you have.
But what about like future generations? A very Singapore mindset. You need to protect the future, your kids, leave a windfall for your kids and all.
Yeah, so it's an interesting read because it doesn't encourage you to give windfalls to your kids when one passes on. It says that actually their time of need is the period when they are like 25 to 35, because there's a period when they're like starting their careers, they're like getting married, they're buying their first house or buying their first car or setting up the family. That's actually when they need your wealth the most. When, let's say, if one passes on at, 70 or 80s, your kids are in their 50s, they are well established in their career, they are at the peak of their careers, family, everything done. They don't need your windfalls. So it kind of like makes you think about, even if you want to leave something for your kids, when is the best time to give it to them?
That's true.
Does it talk about like stuff that you collect as well? Like, people who collect like big collection of
dinosaur bones.
Yeah, anything like toys or watches or something like that. After they pass, like it's sort of like it doesn't mean as much to their children anymore, and it almost becomes like a chore that they have to get rid of.
Yeah. So it's a very interesting book because it's very short. It's like 5 chapters. I read it like 2 days over, I can't remember, Christmas or Chinese New Year or whatever.
Yeah.
So it's very digestible. But your takeaways are quite different depending on what you interpret from it.
Oh, okay.
Because I have a young child now, and I mean, I got a lot of those man hobbies, like collecting toys last time around. Then one day I just looked at it, I was like, if I'm not here, he's going to have to go through all these like moldy toys and get rid of them, and he's going to be cursing me and all that. So that made me much more like, okay, I got to like cut down on all these, things that trappings of the world that I'm holding on to. But that's why I was wondering whether it also advocates for, just having like less stuff as you get through your life.
Actually, it didn't talk so much about stuff. It talks about what you choose to spend your time on. So it gave this example about the author and his kid. When his kid was very young, the kid was very into, I can't remember what was the trend then. And the author said, well, he was busy working, bringing in the bacon, supporting the family. Then 1 year later, he said, well, this is, the show is coming. This is what my kid loves. So he went to ask the kid, do you want to watch it? And the kid said,
he's moved on.
He's moved on.
Oh.
So it kind of like gave him the aha moment when he know that, you have to be present and to be there when it happens. You cannot say, KIV, when I retire, I'll do this. Or, when 1 year down the road, when I have more time, I'll do this with my kid or whatever. It doesn't happen that way. You just have to be there at the moment to be present. Yeah.
Wow. Awesome advice.
Wow, that's food for thought.
Yeah, because I got a young kid also. And it just makes, hearing stuff like that, it's true. It's true. You can always plan to do stuff in future.
So what do you what have you put away, put off that you feel like maybe I should do again? I should do more.
You mean for my kid?
Yeah, for your kid.
Walao, put me on the spot. What have I put off? I think, recently I started going for runs with her. But
that's
nice.
you. That's what you want. She doesn't want it.
But how you know what she wants right now?
She doesn't want to.
Start them young.
No. Okay, hear me out. It's more like, okay, last time, if let's say I go for a run, I will leave her at home. But then now I bring her because I assume she enjoys going out and she loves pointing at dogs. You talk so much you know what your kid wanted at 16 months?
No. But okay, like he's very into a certain type, cars and toys like that. As an adult, I'm like, but. Then you just get into it, you get excited when you see a new one and, let's go and get it together.
Yeah.
Let's go to the store and find it together. So I've sort of gotten into that a little bit.
Because your kid can old enough to express himself.
Yeah.
So this is what we do on the podcast. He just...
But important reminder.
Important reminder.
They don't wait for you to grow up, right?
Yeah, correct.
Yeah.
And on that note, thanks so much, Selena, for sharing not just economic advice, but life advice also.
So Harish, how was that discussion with the chief economist at OCBC, Selena?
I've always wondered about roles like that, chief economist, because an economist as a lecturer or economist as a researcher and all, you can imagine, but chief economist at a bank, right?
Yeah.
Quite interesting.
I've only worked at the lower levels, the bottom feeder parts of a banker. So to me, chief anything, you must be really, at the C level, right? It's a C, right? Chief.
Yeah.
And you're probably giving very important guidance and advice to the most senior leadership within the company.
Yeah. What I find most interesting about her is her experience as chief economist, because she joined in 2000 up till now. So literally, like what she mentioned, the Y2K worry, which now seems so insignificant, right? Compared to all the worries now. Then there was the 9/11, the crashes, the ups and downs. So maybe that's why she can take a very stoic kind of stance on what's going on in the world now.
Yeah, you must be doing something right to also to have resilience, right, to last that long.
Yeah.
Through all these crises as well.
Yeah.
And like what she said, as an economist, either you are correct all the time or wrong all the time.
Yeah.
Or either way, you add value to the organization or the group that you're with, right?
Yeah.
So I think that is helpful in the sense that, you take all the recommendations with a pinch of salt, but also, be aware of what kind of sources you're looking at in terms of getting what kind of advice you're getting from people.
But she doesn't seem too too kind of like befuddled by what's going on in the world today.
Yeah.
Partly because maybe she's seen a lot.
Yeah. And so
Right.
she's not, when you ask her about predictions or things like that, she's like, I can tell you what I want to tell you, and it might be right, might be wrong, right?
Yeah.
But at the end of the day, it's for you to decide as an individual.
Yeah. I mean, I would love to be in the room with her and her team as they discuss stuff. Because unlike this podcast where at the end of the day, we can end with both of us having different opinions, for the economic research team, they have to deliver certain forecasts, right? Which means that they have to come to a consensus of some sort.
Correct.
So that's where I just wonder how that is done.
Yeah. But I also got no delusions of grandeur. But at the same time, a lot of what she does, I feel like almost like as a podcast, we also have to do that. Right?
Always on taking
a lot of information from everywhere, and then have to come to a viewpoint, or basically enter a discussion with people, and not necessarily change minds, but express our opinions. And then you don't agree, agree or disagree. And I'm sure she has to experience a lot of that as well, right?
Yeah.
And even quite contrarian opinions. Like I think her point about how gold versus like digital currencies. Like at the end of the day, digital currencies are still backed by something very traditional like the fiat currencies.
Yeah.
So you're still exposed to the same risk that those currencies have, right?
Yeah. And I mean, heartily to know that she feels that people's digital literacy has increased, because sometimes I feel with this overload of info, it's easier to be speculative and kind of thrown off course into like whatever delusional takes you can find.
She's a glass half full person, optimist.
Yeah.
I think when faced with a pessimist
Optimist.
like you,
optimist. So, I mean, not just me. You look at everything we've been hearing from the leadership and all is like we are dark clouds. So it feels like, speaking to her and other people we have had who work in the financial space, I think they look at their role as something that is quite exciting because of the volatility, right? Which is quite an interesting way to look at it.
Yeah, and thinking about like what assets you should be holding to, de-risk from what's going on all around. Like the noise all around you, like the don't listen to social media every day. That advice essentially, I think applies to investing as well, right? You got to think for yourself. Don't just believe what you read on Reddit or other places.
Yeah. And what you said about how something along the lines of like, if you see the market reacting, they tend to overreact. There's that saying, right? If you think you have found like a good thing to invest in, it's probably too late already. To a certain extent, too late, because everybody has found the hype already. The key is to cut through all that noise and what you said, the pillars, the fundamentals.
Yeah.
So, interesting, because so many people are talking about gold, and judging by the way the world is going, can't see it losing any favor.
Gold, thinking about gold rather than just about, the price of gold going up, but thinking about it as a longer term, giving you peace of mind.
De-risking.
Peace of mind.
So hopefully it gives your listening also some peace of mind, or at least some added insight. So if you enjoyed it, please remember to follow us wherever you're listening to us right now. Please also follow us on social media, where we post shorter extracts and other types of content. And if you want a weekly email that summarizes all our weekly one Shiok things from that week, you can sign up for your little bit at yalabat.com.
And if you want to work with us, please email us at contact@ministryoffunny.com, or go to ministryoffunny.com and there's a contact us page there.
Awesome. Thanks for listening, everybody, and we'll talk to you all soon.